Ladies and gentlemen, Greg Mikulowski with the Forex Quick Look at the dollar versus Swiss. Today's date is July 9th, 2024. In this video, I take a look at the technical levels that are driving this currency pair, and that's coming ahead of the Fed chair testimony, which will start at 10 a.m. ET. He's testifying on Capitol Hill. Let's get started with those technical levels that are in play. Looking at the 4-hour chart in trading yesterday, the price moved below this blue line on 1, 2, 3 separate bars, but then reestablished a support against the 100-bar moving average after failing to move lower and staying lower on those breaks. That 100-bar moving average currently comes in at 0.8955 and will remain a key level that would need to be broken and stay broken to increase the bearish bias in trading here today. As you can see, the move back to the upside culminated with the price stalling against the 100-day moving average. That level comes in at 0.89903. And the high price came just short of that by a fraction of a pip, and the price rotated back to the downside. We also moved back below the 200-bar moving average on the 4-hour chart of the last bar or two, and that is putting a lid or giving the sellers a little bit more confidence or at least control. That level comes in at 0.89817. So as we go through, as we head into the Fed testimony, getting above these levels would be needed to increase the bullish bias. If we already get above the 100-day moving average, I think the sellers return to buyers and have traders looking to get above this swing area up to 0.9005. Get above that level and look toward this trend line, which has connected a number of different swing highs. You can see that all of them through here, and again here. In trading last week, the sellers came against that level. So that level is going to be another key target on the top side if the price should move higher. Conversely, if the sellers remain against that 200-day moving average, puts price lower, it's going to be the 100-bar moving average on the 4-hour chart that we need to get through. Ahead of that might be the 38.2% retracement of this last move to the upside from the low price that we saw in the middle of June to the high price that we saw in the beginning of July. The level comes in at 0.8964. So 64 and 55 would be the key levels to get to and through and stay below to increase the bearish bias for the dollar versus Swiss. So that's my technical look at this currency pair as we head into the Fed testimony. The buyers there's a key support on the downside. There's key resistance on the top side. We'll see how it all plays out. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.